Hello everybody, welcome to Monday Silver Technical Analysis video, two different time frames, the daily and the monthly. My name's Derek and it's the 19th day of August. Welcome. Alrighty, down fractionally for the day, obviously overextended. This is day number 3. Writing this upper band, programmed similar to that of a Bollinger Band, but not quite. This band is usually or always higher than where the upper Bollinger Band is, as this lower one is also lower than where it is. And it does hit quite often. As you can see, there's hits there on the downside. And now, of course, hit here on the upside. Generally speaking, when you see this, you could say, well, that's a time where you expect it to switch directions, and maybe most of the times it is, because it's at a situation where it's both bullish and bearish to sell off right now. For it to be bullish, however, it's important to come down, make the higher low, which is pretty much a guarantee with the last low being down here. And then, as it rallies higher, break the resistance that it has established, which is so far today's high. Also within this, again, we got 1, 2, 3, 4, 5, 6, 7, 8 up days in a row. If we can get above 23.25, it'll be up day number 9. This day here, the first up day was a lower high and lower low for the day, but this day, and every single one has had a higher high and a higher low than the previous day's levels. Friday's low was $22.77. So as long as it stays above that mark, regardless of if it's an up day or a down day, it will be another higher high, higher low. Let's now switch this off to the monthly chart, and what we have here is a move of 17% up to this significant resistance level. What makes it significant? Well, I calculate Fibonacci by taking the high of a key period, which is this high from April of 2011, and the last low from a couple of months ago at 1821. So I take the numbers, 4981, divide that by 1821, which is well over 2, but under 3. And then I put that number to the power of the Fibonacci percent. So this is to the power of 0.236. This one here is to the power of 0.382. And then I multiply that level by the low again, which is 1821. So therefore, you get up to this significant level. It's quite often these Fibonacci levels work as support and resistance extremely well. And even further, that if this level is not resistance or very little resistance, then you would oftentimes expect a fast move up to the next level. That next level is 2674. That general area is the next big resistance level. We're at that one now, which is pretty much the entire $23 level, from 23 to 24. The next one will be about 25.75 to about 27.25. That will be the next, right in here, that would be the next significant resistance level. And of course, if 23 and change is not that much of resistance, you could expect it to go up fairly quickly. As far as this 18 average is concerned, I got a band of the front-weighted 18 average of highs and lows. And when this bull market was going on here, we can see that it pretty much was in a neutral market phase, and that it just established into that of a bear market. So when you see this happen for the first time, for you to consider this to be a bear market, you have now established going lower. So for me to say this long-term time frame is bearish, what I need is for it to have some sort of rally, which has occurred, and then come back down and take out the previous low of 1821. Now, I don't expect that to take place, but that's what I'm looking for this time frame to be considered that of a bearish market. If not, if it manages to get up here and either A, continue going higher, or at least go sideways for a decent amount of time in this range, I would consider this complete breakdown to be a failed move. Oftentimes from failed moves can create fast moves in the opposite direction. The opposite of lower is that of higher. The monthly gains, 17% pretty much right now. And what I've compiled is the best 10 months that silver has had since LBMA started keeping data of prices going back to 1968. So this is the 548th month since then. And the top is, well, we're at 17%. It's got to get above 20.84% to make the top 10. The greatest one was December of 79, up about almost 70%, closing at 32.20. It did this near the top. This one in here happened in the middle of the last up move that was 1974. This was a breakout within the bull market. 1987 of April, that was a failed breakout from really a bear market. September 2009, this was a bull move that obviously continued to go higher over the next year and a half. May of 2009, this was from its bottom because in 2008 it bottomed down to 846, but this got it kick-started again. 1983, just like in 87, it's really a dead cat bounce. April of 2011 occurred right at its top. June 1980, dead cat bounce again, and in February 73, going up to 243 was again the start of a bull market. So I would consider this move not to be one towards the top, but similar to one that you would have seen, say, in this one here. This is the one that it would most remind me of. Coming off of its lows, well below the previous resistance for, at this time, 2135 was resistance. And that would be it. It's pretty much got to get above 24 for there to be having August of 2013 to be placed within this month. Okay, thank you for tuning in, and have yourself a magnificent week. Bye-bye.